Hi guys, thanks for tuning in to another episode of Nuggets News, or our monthly Ethereum update with our friend Anthony. How are you today, Anthony?
Hey mate, I'm going good. How about you?
Yeah, pretty good. It's been a little while. I'm not sure if we missed last month, but it has been crazy, crazy busy. I'm sure you have been as well. But I guess today I wanted to start off with the price action that we're just sort of talking about, because it's something that we kind of don't normally focus on because, the technology and will happen and the price will sort of play out however it wants to over time. But we're just sort of talking then about how it's been crazy good, but you had to have conviction for those people that say, oh, why aren't I rich already? And people are getting greedy at the moment, hearing about these big returns. And it's something that I've really emphasized lately when I share a post saying, look at this great project. It's done 100x. They were investments that when we made them at the time, people thought those projects were dead. You had to have done your research and had so much belief to buy something that was blood in the streets at the time. And even with Ethereum, like it was under $100 in that COVID period, a bit over a year ago, and now it's 3,500 more. That is insane to think about. So yes, there's a lot of money being made, but I do think that people don't realize that the guys that have done really well were here for at least a whole cycle, if not more. They've given back to the community. It's not just all about making money. And when you do believe in something, that's when you're willing to buy the things that are down when there's blood in the streets, and that'll happen again. So any thoughts on all that, Anthony?
Yeah, I mean, I think because obviously it's a bull market, we have a lot of new people coming into the ecosystem, and for them, it's like it's only been up, like a lot of these things, right? They haven't experienced a bear market or a kind of like a brutal downtrend. Yeah, we've had some dips here and there, but a couple of weeks later, we're back up and we're back up and running, right? A bear market is not something where it dips and it goes back up like a couple of weeks later. A bear market is it dips and it keeps dipping. Like there are bounces, but the bounces don't sustain themselves. There's just like gets sold into. So and I think people may not understand that because they haven't experienced it. And if you were around in 2018 and 2019 during the bear market, you'll definitely understand how like every time something would go up in value, like whether it's Bitcoin or ETH, it would just get sold back down, right? And you would basically get to a point where you lose all hope and you have conviction, but you lose the hope. Every time you see it going up, you're like, oh, that's just another pump. Like, and you're kind of like disbelief about it. But then it starts to really trend up again. And then you get that snowball effect where more and more people come in because it's trending up. And then we see what we're seeing today. But I think, maybe it gives people a false sense of security as well, that this only goes up. And then when it does go down, that's why we see lots of people exit the ecosystem, is that they didn't expect this. They were like, well, I thought that, crypto was going to make me rich. It's like, well, maybe if you stuck around in the bear market, maybe the next time the market gets hot. But in the short term, people just I think might have a little bit of the wrong idea about how the markets work.
Yeah, and it's really important to experience that whole range of emotions because there's so many people that are not going to sell and not take profits, and that conviction, you almost have to go through a whole cycle to have it. Like I remember when ETH had the first hard fork and all those issues, and people literally thought that smart contracts on a blockchain weren't going to be possible. And then when it went from up to 320, had that amazing run from a few dollars, and then it was back down at like $100 or something, and you're really asking yourself like, oh geez, was that a bubble? Was that the top? And then having to go through a couple of those was when you think, no matter what, I don't care what price this is at, like I'm going to buy it because I know that this is going to work. It doesn't matter how long it takes Vitalik and all the devs, they're going to build something special here. So I think, yeah, just people need to have a little bit more gratitude, and there's no other market in the world where you're going to be making this much money. The guys in the stock land that are aiming for maybe 7% a year on a good year. Yeah, just be thankful for the opportunity that we have.
Yeah, exactly. And things have taken a lot longer to get built out than we thought they would. I remember back in 2017, there was kind of like talk about staking for ETH being live by the end of 2017. And, that obviously didn't pan out and took much longer to happen. And, it happened last December, but that's only half of it, right? We're still waiting on the ETH1 to ETH2 merger, which should hopefully happen by the end of this year. But yeah, that's much longer than most people thought. And I think the same goes for basically, every protocol, not just Ethereum, but every protocol and every project that promises the world. And, there's all these narratives that get around there. Generally, things take much longer than people think they will. And maybe they're not over-promising on purpose. They're just really excited about what they're building, but they don't understand or don't realize how many roadblocks there are with this technology because it's so new still. And then, of course, markets get ahead of it because markets run on hype and narratives. And, you have the boom and bust cycles. But in the long term, if you're kind of like a multi-decade thinker, and you really think this tech's going to change the world, it's fine. You just ride out the waves, right? Like, make sure you don't end up on the street because you wrecked yourself too much by over investing. But if you really are in it and care about the tech, then the short term stuff is really noise, I think.
Yeah, you probably said something really important there, that if you're in it for the multi-decade, that is why you should never sell. A lot of people sort of say to me, "Oh, why would you not sell, your Bitcoin at 20,000 or your ETH at over 1,000 when you bought it so low?" But you never have held it that high. If I remember thinking, if ETH ever got to $100, I'd be so happy. But you just don't know, and that's why some people these days have their little moon bag that they'll never sell with alts. But with ETH now, we've got a productive asset that's going to offer a yield. So the higher it goes, you've just got a bigger pool of money that's going to be earning 7% or whatever it is. Like, it's amazing. And that is going to be probably another narrative that hasn't even become mainstream yet either. So just keep those things in mind, particularly with the good projects that have good tokenomics, they pay yield, or there's a good reason to own them. All these things are playing out, particularly with DAOs. A lot of people don't understand that it might only be a voting token at this stage, but in the future, when it's got all this revenue, you can start to vote to pay yourself out some of that revenue. So all these things are going to play out, and it's special to watch. But any thoughts on that side of the tokens, Anthony?
Yeah, I think so. I think you put it well with ETH being like a productive asset, has a lot of utility, not just for ETH2 staking, but also within DeFi. And we've seen, people use it in DeFi. And, there's 10.5 million ETH locked in DeFi right now. And, it's not, and that's, I think the all-time high was about 11 million ETH, but ETH has gone up in price as well. So you have like just billions and tens of billions of dollars being put to work within the Ethereum economy. And then, we have all these catalysts coming along, like EIP 1559, which I'm sure a lot of people are familiar with. And then the ETH1 to ETH2 merger, which drops that issuance that Ethereum's issuing each year. So, ETH as an asset is becoming and going to be more scarce than Bitcoin, right? And is productive, which means there's going to be so much more demand. So I think that's one thing that, we've worked towards over the last couple of years, 2-3 years in particular, to get all these upgrades in place. And I think the market is finally waking up to it. That's why we're seeing ETH kind of, especially perform really well against Bitcoin generally. But yeah, on the token side of things, definitely, I think a lot of people are missing the forest for the trees by thinking, oh, it's a governance token, it doesn't do anything. It's like, well, I mean, it governs the platform. It allows token holders to do whatever they want. You can vote in fee capture if you want once the treasuries get built up, and then you can have like flows to token holders and things like that. So I think when you realize that, you might be able to make some nice bets on assets that people have just like written off for dead. Look at MKR. What happened with that, right? It stayed flat for so long, and now it's exploding in value because investors finally saw, holy crap, like Maker makes a lot of revenue as a platform. It has amazing product market fit. It is, still the number one DeFi project by value locked. Why is MKR so underpriced? And then we've seen it play out.
Yeah, this market is still so horribly inefficient that honestly, like, a retail investor can like really outperform things. And you, like, Maker has been probably sitting there undervalued for so long, and it takes one of these mainstream research platforms to write something before everyone else. A lot of people are just following whatever they get told, and few people are independent thinkers. I just want to throw in there quickly, Bitcoin's actually got the Taproot upgrade coming. And so once again, it's kind of frustrating for me to sit there and watch Maxis talk about, Ethereum's behind schedule and whatnot. Taproot was being spoken about years ago. Rootstock smart contracts on Bitcoin was the reason I didn't invest in the Ethereum ICO. It was being spoken about in like 2013, 2014. Oh, smart contracts will be on Bitcoin. There's no need for Ethereum. It doesn't have a use case. And here we are 8 years later. They're finally launching some smart contracts on Bitcoin. Like, yeah, it's great. I can't wait to have privacy on Bitcoin. That's going to start some new conversations, and there's an upgrade. That's all good. But yeah, everything just takes time. So I wanted to dive into miner extracted value. We actually had JP on from Thorchain, and we spoke a lot about the system that they've got and this issue at the moment. So do you want to sort of break down for people at home that might not understand what that miner extractor value is, and then we'll dive into why it's become topical lately?
Yeah, so miner extractable value, or MEV, as it's known, as it's talked about within the ecosystem, is this concept that the miners who control the ordering of the transactions in a block can essentially front run every transaction, because they can say, okay, well, I want my transaction to be first, right? And I'm going to put it first. The mining pools, not the individual miners, but the pools themselves that have most of the hash rate in them. So essentially what they can do is say, okay, well, I know that I can front run this person's trade and make a profit off of it. So what I'm going to do is I'm going to put my transaction first. I'm going to make a profit off of this person, and then I'm going to extract that value. Like, that's where the MEV kind of name comes from. Now, miners haven't typically done this in the past. They were kind of just like, unsophisticated. They didn't really care to do it. They weren't even aware of it, but other people did. So there were a lot of bots running. There were a lot of people doing this, not miners particularly, but they were doing this where they would kind of front run people and do things called sandwich attacks and stuff like that to extract all this value. But the reason why miners have an advantage is because of that transaction ordering. If you're doing it as a regular person, you can't have that advantage until recently, where something called Flashbots came out, which is basically a service that allows anyone to access the miners directly and basically say to them, hey, can you put my transaction first? I'll pay you to do so. Like, you essentially bribe them to put your transaction first. And that means, and that's a big reason why the gas prices on Ethereum have come down as well, is that, when these people were competing in the public kind of like arena, so to speak, they were competing with everyone else for transactions. So, and they were willing to pay the fees as high as they can to extract that value. They didn't care as long as they were profitable. Now with Flashbots, what ends up happening is that those transactions actually bypass the public kind of arena, which is called the mempool, and go directly into a block via miners. They still pay a fee, right, to the miner, but they pay no fee to the network. It's a zero fee transaction, but the miner still makes money because they get a fee out of band, so to speak. So that's kind of like what we've seen play out over the last few months, and a big reason why gas prices are down. And it is definitely not something that we want to continue, right? Because this is value getting extracted from users like you and I, and it is what's called a toxic externality, where basically people doing just normal DeFi stuff, they don't even know that this is happening, but it's very toxic, and it's money that's coming out of their pocket, essentially, if you calculate it. And and I think Flashbots was done to address this issue in a way where it makes it possible for anyone to do this. So it's not just left up to miners, but also to help with the gas fees. But Flashbots isn't something that we should rely on long term. The long term plan is to minimize as much MEV extraction as possible. And there's projects working on this. People would have seen Gnosis and Balancer teaming up for that cow swap thing, which is basically a way to do kind of like auctions to reduce MEV and things like that. But that's the TLDR basically, is that concept that people can essentially extract value from the DeFi ecosystem by going through miners directly.
Yeah. So I might try and give people an example at home, and this is my understanding, so correct me if I'm wrong, but if you do a market order on Uniswap, and this is why some of these people are willing to pay big fees, because there might be traders or arbitragers doing some big trades on like Curve, $1 million of one stable coin to another. If they're doing that, and then there's a market order on Uniswap or whatever it is, and a miner can say, wow, I can see that coming, I'm going to buy that other coin ahead of time and then sell it back to them at a higher price because they've got a market order coming, which means buy at any price. And so they're exploiting that. And look, it might have happened to you. It might be one of those reasons why your Uniswap trade is executed with a lot more slippage than you thought. Maybe that's a little bot doing that rather than a specific sort of sandwich attack. But that's kind of the basics of it. And it gets more dangerous the more, I guess, value we have in the ecosystem, but just the range of things that we have. And you can't, you've got to be able to trust the data. And if there's these kind of things happening, it is almost exploiting it. And like Anthony said, there's projects that are working on this, particularly once we have these privacy layers where people can't see the data, the information. All this is going to change, but for the time being, it's an issue. It was taking up so much gas. That's why gas fees have come down. And I believe they made Flashbots to attack the Flashbots. Is that right?
I mean, I guess it's just a way to democratize MEV, right? Where it's like, stop giving one particular group of an advantage and give the advantage to everyone, which is okay for the short to medium term, I guess. But long term, we need to just basically solve MEV. We need to get rid of it as much as possible to minimize it. I don't think we can ever get rid of it completely, but we can work to minimize it. And as you said, there's a bunch of projects working on this, and it's not an easy problem to solve. What you essentially need to do is you need to either make the transactions private or order them randomly, where the miners or the stakers can't control the order of the transactions.
But this is a lot better in proof of stake, isn't it? Because proof of stake's constantly switching, the decision makers.
I mean, it probably makes it a little bit harder to do, but it all depends on the pools, right? Because if there's like lots of pools in proof of stake, and all the kind of like, I guess it's not called hash power, but all of the kind of like validators are in this pool, then the pool itself is the one that can extract the MEV. And obviously, like, they're not going to always be the one that kind of like attests to the block, or proposes the block. But if they are the one who proposes a block, then they can do it. But yeah, I mean, it's probably less bad with staking, but still, it's not. It's minimized a little bit, but it's still a problem.
Yeah. I mean, it gets back to the importance of decentralization. If we've got lots of people running nodes, and then it gets to the point where it's almost not even worth doing, because you might say it's like 1 time out of 10 that I'm even getting to bribe the right person, and you're losing money. So yeah, once again, decentralization is going to come into it, which is very cool. Other big things that have been happening recently, I think we've started to see that scaling come through that we've been saying is going to only be weeks or months away. What happened with Uniswap just this morning? Because version 2 launched and then they've rolled some stuff back, or I was just reading about that before. Where are they at with that?
There's V3 that launched today, I guess, and I haven't really seen anything about a rollback or anything like that. That's news to me.
Okay, we might leave that till next month. But sorry, did I say V2? I did mean V3.
Yeah, that's okay. Yeah, no worries, no worries.
But I did read that they launched it and then they've had to take it back. So I'm not sure what issues they had there. But I know Synthetics is very close to launching with Optimism. We've seen the uptake of a lot more projects just using xDai, whatever it is. And I did want to have this conversation. Binance Smart Chain is all the rage at the moment. And I was actually walking through this in a live episode the other day and thought to myself, xDai is just almost like a clone of Ethereum, and they speed up the block time, and they make it a lot easier to use, and we call it a side chain. Binance Smart Chain is almost the exact same thing, but because it's got the branding and CZ and whatever, look, it's worked. It's got all that in its favor. But is that right in my thinking that they are almost identical? They're just clones that have centralized and sped up block times. That's right, isn't it?
Yeah, pretty much. And I mean, you said it right. I think the reason why BSC was able to kind of like, I guess, go get so much traction is because of that Binance connection, right? They have millions of daily active users, and they can just funnel them into BSC and say, hey, you can do all this cool, DeFi stuff, so to speak, on BSC with negligible fees. I think, if the fees on Ethereum were low, I don't think BSC would have seen as much uptake, but definitely it is the Binance thing. Like, no one has a funnel like Binance has for new users, right? They're the biggest exchange in the world. And if they had a portal into xDai would have gotten all that growth, right? But obviously, Binance being centralized, they want to keep it all in-house, right? They don't want to give out the value to any other kind of like ecosystem.
Do you want to explain for people at home how, even though it's it's more centralized and they've decreased those block times, it's actually still starting to hit capacity and its limits, and some of the changes they've made technically aren't compatible. And so we've seen Binance Smart Chain actually go offline a couple of times now. So if it becomes like more popular and everyone goes, oh, this is great, this is the way of the future, well, it's not quite it. You can't just take that shortcut. And this is why it's a very interesting race between what they've done, which is definitely serving a need at the moment. Ethereum is too expensive for a lot of people, versus can Ethereum scale in time? And Solana and FTX have also got a pretty decent funnel. Cardano seems to have its big crowd, so people are very passionate about their little community. But now it's about, well, who's going to roll out the best user experience first?
Yeah, I think so. And, BSC, like the underlying tech of BSC is the same as Ethereum. It is essentially a complete fork and clone of Ethereum, but just a centralized one. They removed mining. They added in 21 validators that run the network. And people may remember what happened with EOS and 21 validators back in the day. And then, as you said, they lowered the block times to 3 seconds, where on Ethereum right now, it's about 13 to 15 seconds on average. And they raised the gas limit, which is essentially the block size on Ethereum as well. But that comes at extreme kind of like disadvantages, where because they've done that, you and I can't run a fully validating node for BSC. We can't participate in consensus. We can't become a miner or a stake or whatever. It's completely closed off. There is no way to become a validator. And to be honest, if you kind of like, read between the lines, the validators are probably all controlled by Binance, right? There is definitely a centralization aspect there. But as you said, it's serving a need. It's onboarding people who may not have ever even used Ethereum DeFi before, and allowing them to use these kind of like apps like Pancake Swap's a fork of Uniswap, right? And allowing them to do it like very cheaply. But if you really do look at that at BSC as just kind of like maybe an Ethereum test net where people can go try things out, and then once Ethereum solves its scaling issues and makes it cheaper for people to use, people can come back and use Ethereum, so to speak.
Yeah.
But yeah, the experience is essentially just a centralized Ethereum. That's the way I look at it.
Yeah, I just want to add one thing to what Anthony said there, because this is actually really interesting, technically how it works. So, um, as we said, we've sped up the block time, so it's every 3 seconds instead of 15, let's call it. And we have a certain space of a block, like in Bitcoin, it's 1 megabyte. And by having that bigger gas limit, it just means the gas is sort of how many transactions we can fit in a block. And they have a bigger limit, which means, hey, if there's heaps of transactions, just add more in. But what that means is that if you've got, let's say, these massive blocks and all the nodes have to relay that information to each other, but now you've only got 3 seconds to do it, because even Ethereum can't have quicker blocks because it takes a while to reach consensus. Remember, you've got to go around the whole world with these computers and say, what are we agreeing on, which is the new block to add. And that's when you hear terms like an uncle or a stale block, when there might be two that have added a block to the chain at the same time, and then you've got to decide which one is valid with the next block. So all these things are a lot harder to decide in 3 seconds, and now you're adding more information every 3 seconds, and that's when the network is basically frozen or just gone bang. They're overloaded. Even with 21 nodes, they're all probably being run by Binance. These are the problems that they're facing. So hopefully that's a good technical explanation, because this is stuff that I've only learned in the past 12 months to this level of detail, I guess.
Yeah, no, you're exactly right there, and that's exactly the issues with it. And another key issue is that the size of the blockchain just balloons out, right? It gets to terabytes and terabytes, and that's what I mean by you and I can't run a fully validating node. We can't actually see, hey, did someone mess with the chain? Like, we can't actually verify it for ourselves, which is the entire point of this ecosystem, right? Is to decentralize it, to be able to validate it on consumer hardware and things like that. So yeah, Ethereum could do exactly what BSC has done, right? But then we'd just get rid of decentralization to do it, right? We could solve it overnight, but what's the point then?
I think that's the thing that a lot of people never thought about in 2017, when all the ETH killers came out and, we're doing 1,000 transactions per second. The next one would be 10,000, and the next one would be 100,000. And everyone was going, oh, okay, I'll invest in that, I'll invest in that. People never stopped and thought, if that was easy, like, why wouldn't the Ethereum devs that have been working on these problems for years do that? Like, and there's a reason why they've done everything and done all this research. And one by one, we're kind of finding out, oh, okay, that's why we need to be decentralized. Oh, that's why we need privacy this way, or this scaling technique for this application. And so, it is very interesting, and I just love watching it play out like this. And you've seen the hype cycles, and you've seen the ghost chains that have come and gone. Now the DeFi projects are working their way into the top 10 versus the ghost chains. So it's cool when we sort of have hoped that it would play out this way, and it's slowly getting there.
Yeah, I think definitely, people do wise up to these things over time. There are still a lot of new people coming in that have to learn these lessons, of course. And yeah, it always just amazes me. Like, I simply just ask people, it's like, if all of this stuff was real, and if there was no trade-offs here, if we could remain decentralized and, have this massive scalability, then why do you think Ethereum hasn't done it yet? And usually I won't really get much of a reply to that, because they haven't really thought about it. But it really is that we are trying to preserve what makes these things special, decentralization and security, and then scale at layer 2, as you've been saying, right? So if we can scale at layer 2 while retaining that security and decentralization, then why wouldn't we do that? So, and yes, it's going to take longer, it's going to be harder, and people are going to make these quote unquote Ethereum killers to make some money, whatever. A lot of them, truly are just like cash grabs. Like, I'm not going to name any projects, but a lot of them definitely look like just opportunistic cash grabs. And, and that's not limited to just that. There's a lot of projects like that in this space. But I think that, as time goes on, more and more people learn, and kind of like come to terms with this and kind of get educated on it. But it takes time.
I think there's been an interesting pivot from like Ethereum killer, or even like competing layer 1 protocol now, to interoperability. And a lot of these chains are sort of coming out and openly saying that we're interoperable with Ethereum, or we're happy to help integrate and be a sidechain. We're not really a direct competitor. they kind of have to because all the liquidity is almost there. And some of these chains are now focusing on being Ethereum virtual machine EVM compatible, where they didn't used to be, because they've realized they've got to attract these devs as well. But we've also seen, what did I want to say? I wanted to finish off with one more thought about, some of these chains, like Matic is a great example of this, Polygon. They could market themselves as another blockchain, but they've marketed themselves as like an Ethereum scaling like solution. Hey, we're going to help you use all different types of scaling to be compatible and port over easily to our network and then back to ETH. Again, it's almost like it's a marketing and branding thing, isn't it?
It is, and I should disclose here that I'm an advisor to Polygon, which is Matic. So I should, I'm a little bit biased here, but the way I think about it is that you have two aspects. You have the technical aspect and you have the political aspect. Now, what Polygon has done very well is that they are positioning themselves as friendly to Ethereum, additive to Ethereum, and they really are. I mean, I wouldn't be advising them if they weren't. And technically, Matic's or Polygon, the POS chain is a commit chain, so it's a bit better than a side chain in terms of security. But yeah, you're right. It's essentially that they could have positioned themselves as an Ethereum killer or as a competitor, just like what BSC has done. And that's why you see the Ethereum community are fine with Polygon. They're fine with Matic. They're like, okay, well, these guys are helping. They actually, are aligned with Ethereum. So let's support them, instead of supporting something where CZ is literally on Twitter saying, BNB is going to flip ETH. It's like, well, why would the Ethereum community support someone who's literally, I wouldn't say attacking them, but like deriding them, so to speak.
And can you just explain technically, my understanding was Matic used to be like a bit of a hybrid of proof of stake and plasma, but now they've pivoted more, and that's right in that they're saying we want to be able to use a lot of different versions of scaling technologies and be interoperable. And what did you mean by commit versus non?
Yeah, I'll give a quick overview of basically what Polygon is today. So Polygon, as a lot of people will know, is the rebrand of Matic. Used to be Matic Network, now it's Polygon. But Polygon is a universe of Ethereum scalability solutions. So right now they have their Polygon proof of stake chain, which is a EVM compatible chain that has their own set of proof of stake validators that have to stake Matic tokens to, obviously participate in consensus and things like that and earn some rewards. And then they also have the Matic Plasma chain, which isn't used anywhere near as much as the POS chain is because it's not EVM compatible and things like that. But they also have plans to roll out optimistic rollup solutions and ZK rollup solutions and stuff like that. And on the note about how a commit chain is different to a side chain and stuff like that, Polygon, the POS chain, is called a commit chain because it commits itself to Ethereum, and it also relies on Ethereum for its staking logic. So all of the smart contracts for the staking on that chain, it lives on Ethereum. It doesn't live on the Polygon network. So all the staking payouts, all the slashing conditions if you do something wrong, all that sort of stuff lives on Ethereum.
Okay.
And also, if Ethereum was to go down for whatever reason, Polygon would go offline too because it relies on the Ethereum chain. And the second aspect and technically why it's called a commit chain is that because every so often it will actually commit itself, so the state of its chain, to Ethereum. So it will basically say, okay, we're going to save our progress, so to speak, to Ethereum. And then if something was to happen on the Polygon POS chain, say something catastrophic happened, they have a backup on Ethereum, so to speak. So, and then from that perspective, the reason why I think that's very beneficial as well is that they're actually paying for Ethereum security. They're paying ETH fees, right? They're actually using the Ethereum network as their security, as their army, so to speak, as their protection. But in saying that, I should make a note here. It is not as secure as a layer 2 solution like a ZK rollup or an optimistic rollup. It has different sets of trade-offs. So that's why people kind of like sometimes you'll see on Twitter being like, oh, it's just a side chain. So, well, technically it's a commit chain, but yes, it is not as secure as an optimistic or a ZK rollup, so to speak.
Yeah. And a plasma chain has its own set of rules. It's like Amisa Go is the one that most people know. And so like in Polygon's solution, if you actually want a side chain with your own set of rules and even your own proof of authority or something else, you can make your own kind of set of rules and then work within that network. And then in the future, we've got projects that are trying to help different scaling solutions talk. So we might have a Mesa Go Plasma be able to talk to Polygon Plasma chain and all be part of the Ethereum ecosystem. And so that's kind of where this is all going. Hopefully in the next year, a lot of this will be out. maybe 2 years. And I think that's kind of the upgrades to ETH 1 in its current form that people don't realize. So a lot of people are saying, oh, ETH 2, I didn't realize that was probably 2-3 years away till it's finished. Well, some of the stuff we've seen come out recently, even what was the one that came out just in the last few weeks? ZK.
ZK Porter from ZK Sync, I think.
Yeah,
Yeah.
ZK Portal. So that's even another, we're talking thousands of times scaling solution that's like a near term that's not waiting until Ethereum 2 comes. So there's a lot of cool scaling stuff that's very, very close that people are going to be surprised by.
Yeah, and I want to make a note about the ETH 1 to ETH 2 kind of thing there is that the ETH 2 with sharding is going to actually enhance the layer 2 scalability. It's not going to replace it. It's not like where layer 2 is a band-aid or just a stopgap until sharding comes along. Layer 2s can use sharding and get even more scalability by doing that. And that's why this all works like harmoniously together. This isn't like a let's wait until ETH 2, but in the meantime use layer 2. I think that's where a lot of people get tripped up is that, oh, okay, well, this is all just temporary. Once ETH 2 comes, all the problems will be solved. That's not how any technology works ever. It's a mix of solutions that all work together to achieve what we want, which is scalability.
Yeah. Are there any other projects? I talk about loopring a lot on the channel. Even the Gitcoin grants with their ZK, what is it, ZK Sync wallet?
Yeah, ZK Sync, yes.
Are there any other favorites of yours that you like that have implemented recently? DYDX? I'm just trying to think of ones that have already got scaling for people to have a play around with.
Yeah, so yeah, I mean, you mentioned Loopring, which is building their own ZK rollup kind of ecosystem. So they're decentralized exchange, both order book and just like an AMM. So like I guess a Uniswap on Loopring, so to speak. Yeah. They also have like a smart wallet and a payments mechanism. So they're basically building a whole layer 2 ecosystem, which is really cool. You have Diversify, which is doing that sort of stuff as well, using Starkwest technology, as you mentioned, DYDX. And recently, something really cool came out from Salah Network, actually, that are basically doing like a hybrid approach where they're allowing people to batch on board onto layer 2 from layer 1. So you don't have to pay those high fees because the fees are still high to get onto layer 2 from layer 1. And then recently we saw OKX, a major centralized exchange, saying they're going to bridge into Arbitrum, which is an optimistic rollup solution similar to Optimism. There's a lot going on right now, and it's kind of getting crazy to keep up with it all, I think, right now.
Yeah, some people will remember that I put up a little demo video on Twitter and YouTube of me using Uniswap on Arbitrum. And yeah, so they were using optimistic rollups. That was one of their early test nets. So what Anthony's kind of saying is, you might have heard of this when you go into the Lightning Network, for example, where you've got to pay an on-chain fee still just to open up a channel. It's a little bit like that in this ecosystem. So once you're into the world of a ZK, so like Loopring's sidechain layer 2 I should say, not a sidechain, you can go between their wallet to their exchange to their AMM, whatever it is, and port between these different compatible ZK scaling technologies. It's very, very fun. Even Raiden I had to play around with, and you can already import most ERC20 tokens, I think. So you can put in your favorite ERC20, send it over the Ethereum's Lightning Network, and yeah, this is just cool stuff to play around with that I think even people in like Bitcoin have got no idea that this is so far ahead of, say, the Lightning Network, for example.
Yeah, I think so. And, nothing against the Lightning Network or anything like that. But the thing is that I always kind of felt was a bit of a problem with Bitcoin scaling is that they went all in on basically at least one solution. Whereas in Ethereum, we have like, so many different solutions, like, at least tens of high quality production ready solutions that are and a lot of them are in production. People are using them. So from that perspective, I sometimes see people comparing Ethereum layer 2 to Bitcoin layer 2, and it's like, well, no, I mean, it's totally different. Like it's worlds apart, I think. And the Lightning Network serves its purpose. It works in a certain capacity, and that's fine. But the funny thing is that if you bring your Bitcoin over to Ethereum, you could just use all of Ethereum's layer 2s with your Bitcoin already. So that's an even funny thing to think about.
Yeah, like I said, I shouldn't. I'm not talking down because there are some cool little Lightning Network apps that I've even got on my phone and whatnot. There's some cool little DeFi projects that are starting to pop up on Bitcoin. RFox have got their bridge over to Rootstock that I just mentioned, so you can now technically do NFTs on Bitcoin. But like Anthony said, it's just these network effects where if you can, what happens if Bitcoin gets so slow and expensive compared to ETH that more and more, I think it's 1% of all Bitcoin are now on Ethereum already. So what happens in that situation when it gets more and more? These are debates that we're going to see in the future, but just things that people need to be aware of.
Yeah, I think so. I think it's going to be a never-ending debate, to be honest, because of the tribalism and the everyone holds different coins and things like that. But at the end of the day, what really matters is the tech. The tech will speak for itself. A lot of the time, people will use what they get value out of, and that's the long-term play. It's like you just bet on the things that you think that people are going to use in the long term, outside of all the tribal arguments and all the maximalism. What
Yeah.
really matters is the value that the tech is giving to people.
Yeah, so NFTs has been another one that's probably been spoken about to death, but I am sort of glad that we've seen someone like today, Gary Vee, massive, massive influencer and personality in the US in social branding and whatnot. He's brought out his own NFT marketplace. He's promoting all these unique use cases. He's not just trying to sell, little artworks or collectibles or anything like that. He's opening up NFTs to the range of possibilities and trying to get people to understand that, hey, there's so much more to this than what people are currently focusing on. And there's so much noise in the space at the moment with some of these, shitcoins that are launching and NFTs that are just being overvalued or people just trying to monetize their audience or whatnot. So I am glad that stuff's happening, but I'm also glad that something like NBA Top Shots is on the Flow blockchain and it has got a lot of users into the crypto space that would not have used that system if it was on Ethereum and gas fees were too expensive. So it does sort of force ETH devs to, get on with it. You need to do these scaling solutions before we lose more market share and other apps and whatever. But any thoughts on NFTs, Anthony?
Yeah, I think in general, it's as you said, it's been talked to death. But a couple of points: NFTs have worked to bring more people into, I guess, like the Ethereum ecosystem than maybe anything else. I think, which has been really positive. And I think an even more positive aspect is that the NFT economy runs on ETH as an asset, so just another kind of like utility for ETH, another value driver for it, which is really cool. And on your scaling note there's actually a project I didn't mention before called Immutable X, which is a layer 2 project, right?
Yeah.
They're Aussie based, so
We had them on the
really
channel
cool.
not that long ago, so I forgot to mention them. Sorry. Yeah.
Yeah, no, but it's pertinent to the NFT discussion because they already have it live today with their Gods Unchained cards. You can go on there, trade gasless, with the full security of Ethereum on this layer 2 NFT exchange. And I think they're rolling that out to a bunch of different partners that they've got on board as well. And that is going to get back a lot of this, I think, market share that may have bled to some other chains and things like that. But I do think the long-term outlook for Ethereum is still incredibly bullish. And even the short-term outlook, it's not like Ethereum lost activity and, ETH went down in price because these other things got traction. It's that there's so much demand for this technology now that a lot of different ecosystems are going to pop up and get some traction and stuff like that. But I still think that Ethereum is fine. Like, I don't think this takes away from Ethereum at all.
No. Anything else, Anthony? I know we've sort of had that little minor upgrade. Was it the Berlin hard fork? People probably haven't even noticed. I think we've got the London fork coming up as well. After the bit of the debate and the bit of friction between the miners saying, oh, well, we'll do this, and the devs saying, okay, well, we'll just kind of bring forward some of these upgrades or whatever. So how far away is the London upgrade?
So London's got a date of July 14th. That's the date that's being targeted, and that includes EIP 1559, which I'm sure everyone knows about by now, the fee burning EIP. But so yeah, that's July 14th. And then you mentioned the miners fighting back against this. Well, they kind of shot themselves in the foot because now the merger of ETH1 and ETH2 is being brought forward, and they're trying to aim for end of year for that, which means we're basically getting off proof of work Ethereum, merging ETH1 into ETH2, and it's going to be a fully proof of stake network, which is really exciting. That's going to be the biggest thing to ever happen to Ethereum, I think.
That is ambitious. I'll be honest. I'll be surprised if they get that done this year. But hey, we can.
Yeah, I mean, I've been saying the same thing as well. Even though I'm like obviously very bullish, I kind of think to myself like, this is a very ambitious thing. This is the biggest thing that's ever happened to Ethereum, I think. And you need to get it right. But the teams are very good. They're world-class teams on both ETH1 and ETH2. But yeah, I wouldn't be surprised to see it pushed back to early next year. But it's good to have a target. Like if everyone's working towards getting it out as soon as possible, we'll see how that plays out over the next few months.
Now, one theory that I've been talking about for I think a couple of years now, and I think we've discussed it on the show as well, was Ethereum Classic is going to have its second coming, or you're going to see a lot of people that own it start to shill it more when the miner Ethereum debate starts to happen. And what happened this month? That debate kicked off. Ethereum Classic's gone from like $8 to $80 in the past month or two. So that whole hey, we're going to stay proof of work, come over here, the miners are going to get behind that movement because they've spent all that money on hardware. So just be aware of that. If you've invested and played that as a bit of a trade idea or whatever, that's worked out well. But whenever there's money at stake, people are going to look after their own interests. Grayscale have got a massive ETC fund, and Barry Silbert and Grayscale are the biggest holders of ETC by a mile.
Yeah, I mean, I've seen that play out, and I mean, from a trade perspective, I get it, but from an investment perspective, there's nothing going on Ethereum Classic right now.
No, they ran out of money. Their devs already ran out of money a year or so ago. So I'm still surprised it's alive. But anyway,
nothing dies in this ecosystem apparently.
Well, it's probably a good point to make that this space at the moment is more focused on narratives than ever. Like Dogecoin has added $80 billion in value. Like, should we be surprised that Ethereum Classic's had a run? Not at all.
No, narratives and memes, my friend.
So any final points on Ethereum? Any things you're looking forward to, or anything we've missed today, Anthony?
I mean, I think people may still be underestimating the impact that 1559 is going to have on ETH as an asset, because obviously we have the fee burning, but it's not like we're only generating a few thousand fees a day on Ethereum. This is tens of millions of dollars of fees, right? And most of them is going to be burned. Not all of it. I think some people think all of it's going to be burned, but we assume that most will. We won't know for sure until it comes in, but still, most is going to be burned here. And I think that's just going to put like pressure on ETH as an asset, like for all time, essentially. The more the Ethereum network is being used, the more fees are going to be burned. And this is literally burned. There is no coming back from this. It's out of the circulating supply. And I think that's why we're seeing ETH outperform so well, is people waking up to this fact that 1559 is coming, but also the proof of stake merger, the ETH1 to ETH2 merger, where the issuance of ETH is going to drop by about 90%, from 4.5% right now to 0.5%. And I've seen people memeing the triple halvening as a thing, because for this to happen in Bitcoin, it would take 3 halvenings or 12 years. And this is going to happen for ETH as soon as the merger goes through, which is basically an instant thing. It's like any other hard fork. It just like, branches off and here's your new chain, so to speak. So I think that's what people maybe not even woken up to at this stage still.
Yeah, I've even been surprised that when we put together those tweet lists back in Crypto Winter, or recently saying, hey, these are the reasons why I think ETH go to 10K or whoever it is, I've been still surprised by how much price has moved and how people have caught on. And I think sometimes you forget that, if you are at the bleeding edge of this and it's so hard to keep up with everything, if you are someone that does, you kind of like, I'm literally thinking like, why is ETH $100 with all this stuff happening? And all of a sudden the market goes, oh, this is happening. Boom. And you're at $3,600 ETH. So it the triple halvening, as you said, the stock to flow model that I've tweeted, like all these things can become narratives very quickly. The yield play. So maybe that $10,000 ETH this year, maybe it's not unrealistic at all when the market is so inefficient at pricing these things in. So
yeah, I was literally called insane when I said that ETH was going to 10,000 back at the $100, $200 mark. People thought I was legitimately crazy. And now people would think, wow, 10K is a bearish target. It's just so funny. And you've been tweeting out a lot about this too, with the stock to flow and stuff like that. You've been on the same train I have, and it's good that more passengers have gotten on board lately. It's nice to see. What is
it? Ultrasound money, that graph that's been flying around. Who invented that?
Justin Drake from the Ethereum Foundation. He's one of the, I guess I would say he's an economic researcher, crypto economic researcher. And it's this concept that we would be burning more ETH than we would be issuing once proof of stake happens, essentially, which is even more, it makes ETH deflationary, essentially, which is very bullish.
Yeah, cool. Okay. That's probably a good place to end, with a bit of hopium for everyone. But we'll catch up next month. Let us know if there's anything, ETH technologies or whatever you want us to talk about, as always, guys. And thanks for coming on, Anthony.
Yeah, thanks for having me again, Alex.
Cool. See you guys.
Awesome.